Yes, ma'am. Thanks.
Okay, right. So today we are going to sort of go into the systems and see what the operational level, what goes on. So we've covered the institutional frameworks, the general overview, and the legal framework. So now we are going into the sort of the nuts and bolts of things. So what I will do is, let me start. So we are here in a course structure. This we'll see how this goes. There is a lot of uh, content. I can see if we need to cover it in one or whether we need to cover it in two. So let's see how it goes. So the usual house rules, and you've probably seen this before, which was this was in the first lecture. So this is what we are going to do for payment systems. We are going to look at the breakdown. So there's large value payment systems and retail value payment systems. You all already know this. And we have, within the retail payment systems, we have the various types of retail payment systems that Sri Lankans can use to make small value, either time critical now because of SEFs, you can do time critical payments as well, or deferred payments. So these are the numerous options. What I'm going to do is I'm going to focus a bit on the RTGS, which is the real-time gross settlement, and we'll take a break and we'll come to the retail payment systems. So we'll do it like that. So the importance of payment systems to an economy, and you come for this course, so either you're interested or you know it's important, or maybe it's compulsory, whatever reason that you're here. The reason that this course has made it into this module has made it into this course is because payment systems are increasingly becoming very, very important to not only the financial industry but economies as a whole. And there is a lot of investment going in, and not only banks investment, even companies, they facilitate online payments, they facilitate card payments, and there's an investment involved. There's a significant investment involved, and there's a significant cost structure involved, be it fees, be it the MDRs, the merchant discount rates, whatever it is. If it's a POS terminal, you have to buy it. So there are so many, there's so much of investment going in to enable electronic or digital payments. So in that sense, it has become very important. And the more important it becomes in an economy, the more sort of dependent we become on it, and it reaches a systemic state where without it a lot of things can't happen. A good example is electricity. You know, with increased continuous electricity. So we now in Sri Lanka, most of us have continued electricity at a good quality. So it's not fluctuating. So because of that, we have a lot of electrical equipment in the house, in our houses, in our businesses, everything. We have electricity powers so many of the appliances and equipment that we use. And because of that, if we have a power failure, we really feel it. And there are a lot of things come to a standstill if there's a power failure. So payment systems have gained that in many economies, and even in Sri Lanka, it is coming to that level. So I found this quote by Alan Greenspan, the former chair of the Federal Reserve in the US, that is the US Central Bank. He actually made the statement after he left, and that's why he says it like this. We always thought that if you wanted to cripple the US economy, which is one of the largest economies in the world, as we know, you would take out payment systems. Banks would be forced to fall back on inefficient physical transfers of money. Businesses would resort to barter and IOUs, and the level of economic activity across the country would drop like a rock. And this is something that we always need to remember when we are working with payment systems. Whatever it is, we have to make sure that it can be available every single day, or at the regularity that it promises. And increasingly, as people move into digital payments and everything now, when we order food, we order a cab, we are all using digital payments. When we come to that point, there is almost sort of no turning back. It can really affect a system if it falls down. And this is why Alan Greenspan says this. And it's a very important thing for us to always keep in mind. We take payment systems for granted, but as we have now been studying, it is increasingly getting complex. When you look at the institutional framework, when we look at the legal framework, it increasingly becomes complex. And if something happens to it, you have to resort to the manual systems. And that means the speed in which we do things, the accuracy, the security, all that comes down. And that would seriously affect the economy. And this is why we say that payment systems carry a systemic risk. The entire economy can be affected. So we'll start with RTGS. Now, in Sri Lanka's RTGS system, and I think this is similar to all RTGS systems in the world, large value payment systems. It's an electronic and computer-based fund transfer system, and so it has two components: fund transfer and settlement. All the other systems that we will learn today or in the next lecture are fund transfer systems. They're only payment systems. So this is both a payment and settlement system, right? So the settlement component is also included in this, right? And this processes, and the effect is that the final settlement of each large value and payment instructions individually and immediately are settled on real-time and gross basis. I think we have already studied this, what real-time and gross basis is. So real-time is that you don't have a waiting period, and gross is that it is settled one-to-one, right? And there is no bundling, or there is no netting, there is no deferred payment. Each transaction is settled on its own, right? And once the settlement is done, the payment is final and irrevocable. Now we discussed this final and irrevocable when we were going through the Payments and Settlements Act. There, it gives it enables payment clearing and settlement systems to have final and irrevocable quality. The Monetary Law Act, which facilitates the RTGS, this is very specifically stated as well. So I think it's very important for us to remind ourselves of the distinction. Now, the question that one of our colleagues raised at that time was that there is a revocation that happens, but that revocation is a private arrangement. In the system, the operator is not going to revoke any payment. If a bank checks everything, because the bank checks everything and sends it through. So once the bank sends it through, the operator takes it as correct and the payment goes through. If this quality of final and irrevocable is not there, it becomes seriously problematic for the efficiency of the system and the trust Because if people can always revoke payments, then no one is going to use it because they never know whether a payment is going to get revoked. This finality and irrevocability is a quality that is also there for cash, right? Once we give it, it's given. To take it back from a person, we have to ask that person to give it back. We can't, after we've given it, we can't take it back. We can't like steal their wallets or anything like that, right? So we have to that transaction is over. If we want to revoke it, it has to be a new transaction or a new negotiation. I hope that distinction is clear. So the RTGS system in Sri Lanka is the only large value payment system in Sri Lanka. And it was established in 2003. And the same information is here, securely and irrevocably, right? So the RTGS system is a part of the Lanka secure system. It largely becomes a part of what we call Lanka Settle, where we have the payment settlement and the settlement of government securities both happen through the RTGS system in Sri Lanka. And actually in many countries, this is the arrangement, right? So why would banks or participants, we have primary dealers, why would RTGS systems be there in economies? There is less credit risk. Can someone explain what less, can either of you, would you like to explain what less credit risk is?
Since it's a real-time settlement, so there is no default risk.
Yeah,
from the
there is
remitter.
no default risk. So this is something that's very, very important, especially for large value payments. Because what happens is if banks have large value payments coming in and they're not getting settled, at the end of the day, the banks might have run up their liabilities, their obligations to other banks more than what they can honor. So to avoid this, the real-time gross settlement ensures that especially large value transactions that the bank might be unable to honor is settled immediately. So there is less impact on other participants in the event of a failure of a participant during business hours. So this is what less credit risk really results in. And then participants get full control of their own and customers' payments and for better liquidity management. Now, I think this also we learned earlier. Now, here we have our ILF and those arrangements, but in countries like Japan, and I think it's Switzerland, they don't have intraday liquidity management because their liquidity management is so good that that they don't need any central bank financing in central bank liquidity to settle any short-term liabilities. The RTGS system can efficiently manage the growth in the volume of transactions. So the scalability, it can handle quite much more volumes. And we will see when we see the numbers, the volumes that RTGS handles. It is the highest in the country. So this capacity is enabled by the RTGS system. So having an RTGS system in the country is sort of a mark of development in its sort of financial and economic progress story, because we are saying, okay, we have systems that can facilitate large value, time critical. So time critical is very important for big businesses. They need to be able to make sure that you're not sort of holding on to obligations for too long, and you can do these really quick transactions. So having an RTGS system is very, very important to show, to demonstrate the capabilities of an economy. So this is a very interesting experience that we always have. Where we have international institutions that always come to study our systems and all of that. And when they see Sri Lanka's payments infrastructure, they are very, very impressed, because since Sri Lanka falls into the category of developing countries, and if you list us in certain under certain criteria, we might not come on top. But payments and settlements is one of the areas that we are internationally extremely comparable with developed countries. And they're always amazed by how advanced it is. And they usually don't have a lot of recommendations, because they expect to promote sort of very small value, informal sort of outside banking sector payment systems, and they realize that we have a very advanced system. So this is an advantage that we have. And of course, in the RTGS system, there is obviously it's cashless. So these are some of the features. Do either of you work with the RTGS systems? No. Right. So it's
sorry, ma'am.
Do you work with RTGS systems from the bank's end? Have you done any?
Yes.
Yes.
Almost on daily basis.
On a daily basis. Okay. So what is your role in it, Asela?
So we will advise our treasury on instruction of our client with regard to some remittance. So thereafter, we will we will block funds and then confirm the treasury, so that they will do the internal arrangement with that bank, or maybe through central bank. So during the day, they will recover from the client's account. So we are there to give the client instruction to the treasury.
Okay. So this is the bank end of doing it, because you have to either so basically what you're saying is that the customer will.
This is rather from the branch point, not the entire bank. Maybe we have the back office of the bank.
Right. So this is so what you're saying is the customer informs you that there is going to be this transaction. So you inform treasury to get ready to make this transaction at this given time. Is that in summary? Yeah. And then you will settle the money from the customer's account.
Yes, ma'am.
Yes, right. So that is the crux of what takes place in RTGS. And so just the features, I think what you described in sort of step by step. So payment orders can be initiated and submitted by the paying participant, and the central bank can debit credit the participant's accounts. And payment instructions are executed on a first in, first out basis. So we will get the files and the lists, and then it's sort of listed in the first in, first out order. Sorry, queued is the word that I was looking for. If the payer does not have sufficient funds, small mistake here, sufficient funds in its account, then the payment order will be queued, right? And the payer can change the payment order by changing the payment priority. So there is some leverage. So there is, in the system will always allow us to have certain points of leverage until we have that sort of Japan level efficiency, right? Because systems can be written in any ways. We are the ones who come up with the rules. We have to, the banks and the central bank will get together and see what is most feasible to get this done in the most practical way. So if we go to very strictly say, this is real time. If there is no money, then you lose your banking license or something like that. No, then it's not practical. It defeats the purpose, right? So we have to be practical when we say real time payments, there are instances when the payment doesn't go through real time because it's a insufficiency of fund. So then the bank quickly finds a way to fund it either through central bank's intraday liquidity or some arrangement and gets the money in. And then need more liquidity to settle payment on a gross basis. So the participants can use the intraday liquidity facility, right? And all participants can monitor their status of the account, and unsettled transactions are automatically deleted at the end of the business day. So these are the practical things. Things are not carried forward, right? If you don't settle it, then by the closing time, tough, that's the end of it. So there is a level of leeway, some space, some allowance that is given because it is accepted that the market is not this extremely efficient situation. So therefore, there is some space that is given for participants to try and settle their transactions as soon as possible, right? And then participants can also make forward data transactions up to 10 calendar days. So in Sri Lanka's current RTGS system, the vendor is CGI UK. And CGI UK is the vendor for the RTGS system in UK as well. And the participants use the Swift FinY copy service to submit their payment instructions. And the RTGS is owned and operated by the central bank, right? And operated by the Payments and Settlements Department. I think I told you probably in the first or second lecture, I can't quite recall. Probably when we were talking about the institutional framework and the role of the central bank, that the RTGS, if you come to the Payments and Settlements Department, you will see the RTGS. It's it's not what people expect, but it is it is what it is. And because these are all systems, it's not like this large room with many multiple processors, but the processors are elsewhere, but the systems are all running, and we have an efficient staff who can handle the whole operation. So it starts at 8 and closes at 4:30. So this is basically how the transaction flow happens, the message flow via Swift. So Swift is, we've discussed what Swift is, and it's internationally used for transaction messaging, and in Sri Lanka also we use it heavily, but not all countries use Swift. Some countries, for their local currency transaction payment systems, they use their own messaging system, because it is, for some of them, they think, okay, the messages are going outside, it's not safe and things like that. But so I mean, Swift is a very efficient system that is used internationally and works. So the participants are the central bank, commercial banks, primary dealers, EPF, and the Colombo Stock Exchange. All these are participants, and the primary dealers are there because they have, for settlement purposes, for treasury bills and government bonds, they have the settlement leg coming through the RTGS system, right? And then there is provision for special cases like EPF and the Colombo Stock Exchange also having participant status. And these are, again, if you read the Monetary Law Act, there is provision for these sort of participants to join the system as well. Right? So let's look at the, can you see my screen? I should make it bigger, right? Okay. So if you look at the transaction volumes and values, we've interestingly, despite COVID, we've seen the RTGS volumes going up, which means even though there was a slowdown in the economy, the electronic transactions have been happening, right? If you look at the volumes, it's pretty high, right? And this is in billions, right? So these are trillion. And then if you look at the breakdown, right, most of the transactions are initiated by the commercial banks, right? And then we have the central bank's participation, right? And then we have primary dealers and others, right? So this is sort of the structure in how the participants use the system, right? And then if you take it in time, right? And so the reason I put this is because this is real time, and then we can really see what goes on in the banking industry by looking at time. And when we look at volumes, we have in the afternoon, the volumes are high, right? If you take value-wise, it is fairly similar, right? So in the afternoons, the value is slightly lower, right? And so which means we have transactions that are going that are high volume, but low value.
Excuse madam, you mean to say so we can have RTGS twice a day?
No, this is just distribution in terms of time, like what happens before 12, what happens after 12.
Oh.
So you can, because up to 4:30 it's open, right?
So,
for you, for you, you have to submit your RTGS in the morning, right?
Yeah, before 10:30 generally.
Right. Yes. Sorry. Yes. But wait, let me. So there is the OMO operations, then the primary dealers. Banks have to provide before 10:30 the full breakdown of what happens after 12. I'll check on that one and come, because I forgot that you all have to you all close at 10:30. Let me check on because I don't work at the operational level, so let me check where this change comes for you and the rest of the participants.
Yeah, okay? This is, I think, for the branch only. The cutoff time is 10:30. Maybe they have some leeway, maybe till 12 for the treasury level.
I'll check on that for you.
Okay.
I'll check on that for you.
Okay, thanks.
So then we've seen this transaction volumes and values both have been going up, except last year we had a slump, and this could be because of the issue that we saw, which was the pandemic, and there was a slowdown in the economy. This could be due to that. We don't know, but the value has increased. We don't know why the volume precisely has gone down. And then, so the types of transactions we have interinstitutional.
Can't it be because of the SEFT now is more actively used by the commercial banks instead of RTGS?
That could be that could very well be. So there is up to 5 million you can do SEFT transactions, but depending on the bank. So it could very well be CEFs as well. But however, because this was the pandemic time, and let's say the stock exchange was closed, there was trading, so EPF work might have slowed down. So we don't know from where. If we look at if I get a sort of a more detailed breakdown, we might be able to see at which points year on year, if we take participant wise or types of transactions at a more granular level, we might be able to spot where the decline took place. But of course, thefts, it could very well be a reason, and we are noticing that because there is a trend, the growth is slowing down. So it could partially be because of thefts. You're quite correct. But for this to explain this sort of decline of 7.2, we might have to go to a sort of a more granular breakdown of transaction types to see which volumes suffered. And because it was COVID last year, we might have to, and there was a lot of lockdown, we might have to see what aspect, and the stock exchange was closed and all these things happened. So we might have to see. Next year will be the real sorry, this year will be the test, but yeah, let's see. So fingers crossed this year will be a normal year, so we can see. Of course, this if it's continues to be a normal year, then we'll have a the base is low, so again there will be some odd number coming up, so it'll actually have to be year after that we see a proper number. So the types of RTGS transactions, we have quite a varied number of transactions, and so of these you initiate the customer transactions. Is it, Tasela?
Yes.
Yeah. And so the rupee leg of foreign exchange market, fund leg of OMO, then we have start of day files, the fees, charges. So there are so many different types of transactions that take place in this system. It seems like something that only does one thing, but there are sort of various types of transactions that come in throughout the day. So by size, I thought this might also be useful. So in 2020 Q3, most of them took over the 1 billion and over that level. So we'll have to see. It might just be where we have smaller numbers going out, but this is negligible as well. So CEFs might be playing a role in the relatively smaller values leaving the system. So the facilities available for participants. So there is the browser workstation, the CBSL WAN, and you can view your balance of the RTGS account, the settlement account, details of all credit and debit transactions, the queue transactions, cancel. So all this, so it goes. These are. I just want to give this very detailed view of this system, especially because it is operated by us. So this, and it's only a very small group of people who use this, but it has a very big impact, because about 90% of our digital transactions go through the RTGS system in the country. So it's important to know the different aspects of it. Yeah, so the facilities available for participants, you have interbank transfers, cash withdrawals, and the statutory reserve adjustments, money market settlement. So all these, the fund leg of scriptless securities, as we mentioned earlier, the foreign exchange transactions, SLR leg also happens through this, right? Now, RTGSs are going through a phase of change globally, because we have new types of participants coming in, and this is really the purpose of us doing this course, because we are looking at how the systemically important infrastructure, which is payments and settlements, how they're changing, and how fintech innovation and how all of that is really affecting um, the payments and settlement systems that we know. We already know these. We are using them in some way or another. We have already started interacting with them. So the question is, what is happening, what changes are happening, what changes in the environment, technology, consumers having more technology in their hand, new types of technology, new types of architectures. When all those come along, what is really happening to these existing systems that banks have invested a lot on, that central bank has invested a lot on, that internationally we connect on some levels as well. So what is happening to all these systems? So now, the Sri Lankan Central Bank is also looking to revamp and upgrade the RTGS system. And so we are trying to have a hybrid pricing mechanism to avoid high volume of the last minute transactions. So these are problems that we're trying to avoid. And so integration of all transaction history into the RTGS system itself. Right now it's in another system. And then try to see if new technologies can be used, like blockchain. And we had a tender, and we had a consultant, a foreign consultant, who came and sort of shared their experience as well. And we're looking to see how we can introduce a new RTGS system in a to meet the growing needs and the changes in the economy and the new types of participants that are coming. So it's not only the banks that are rich nowadays. There are a lot of other companies that can muster up the capital like banks as well. So they want to come into payments. They want to facilitate payments. So in that uh, in that scenario, how do we really address the needs of this market? So I think this is this is the challenge that many central banks are facing, and the banking industry as well. How do we change to meet the needs of not only the future, actually it's even happening now. So how do we respond to these changes? So I want to share this experience of the Bank of England. And after this one, we will go for a break and then come back with the retail payment systems, right? And so an interesting thing happened in 2014 in UK, which was, now every day, like a mantra, we say, okay, it's systemically important, you can't risk it. If something happens to it, it's a big problem. So but central banks and the banks, they're always trying their best to make sure that the systems don't crash, right? Whatever said and done, they'll put bandages and whatever and tie it up with, hold it up with their own hands or whatever, to make sure that the system doesn't crash. But in 2014 October 20th, the RTGS system in UK had an outage of 9 hours. Right now, this is very, very significant. Now, I mentioned this when I was introducing the RTGS system earlier in the lectures, and this was sort of a nightmare coming true for the Bank of England, and actually not only for the Bank of England, even for other central bankers. The sheer knowledge that it actually happened to a central bank itself was terrifying, because this is the one of the main things that everyone tries to avoid, right? Because when this happens, you really don't know what the outcome could be. So we got to see firsthand how our economy responded to it, and how a central bank responded to it. And it was quite a big deal, because remember, we are talking about London, the financial, which is one of the main financial hubs in the world, right? And not only for London itself, it is an international financial hub. So the RTGS system is used so many times more than our one, right? So the, and it not being available for 9 hours, when we're talking about real-time gross settlement, you're talking a lot of possible important transactions that could have failed, right? So following the restoration of the service later the same day, the governor of the of the Bank of England, Mark Carney, apologized for any problems caused by the outage and announced of an independent review into the causes of the incident, the effectiveness of the bank's response. That is, how did the bank respond when it found out that there was an outage, and then what were the lessons learned, right? Now Deloitte was given that project to investigate the causes, to conduct the independent review. And they found out that the root cause of the incident was the introduction of defects as a part of functionality changes made to the RTGS system in April 2013 and May 2014, right? So now what had happened was they made certain functionality changes, that is to change the speed or any sort of the performance. They had made changes, and then but these changes had bugs, so they were not, the technological changes were not perfect, right? And they did not catch this until this 20th day when the volumes had increased. And there is a report on this. You can read it up if you are interested. This is a technological issue, and one of the main reasons was the legacy, which is the legacy systems. So RTGS in UK is older than the RTGS in Sri Lanka. So it is in 1996, if I'm not mistaken. And so there'll be layers and layers of software code being written on each other to solve, sort of day-to-day problems and all of that. And then finally, the people didn't know, the newer staff didn't know exactly what was going on. So the changes that they made had a bigger effect that really burst on the 20th of October, right? So based on the data obtained from the land registry, the report in the report it says, it is estimated that approximately 2,340 residential property sales were settled on a typical Monday. So 20th October was a Monday, right? And using the survey results, this would mean that approximately 700 transactions may not have been completed until the next day or after. Now in the UK, most of the house sale, the settlement, the value settlement happens on Monday. And because of this, people there, and it's a very sort of a tight, efficient market there. So what happens is, if you are going to get your house tomorrow, you will stay in the previous house until the last day, and then you will immediately move to the other house. Now, if you can't get if you can't send the money in on time, you don't get your keys, which means suddenly you're left homeless, right? It can be an adverse situation like this, not like in Sri Lanka where we say, oh, I'm sorry, there's outage, can I just come and stay here or something like that. Those things don't really happen in those countries. So people were in a real sort of a awkward situation, the home buyers, because hardly some of them were sort of in a homeless state. So this is what is meant by systemic risk. You don't know who it will affect. It will affect people in the most unlikely of ways. You would think, oh, some financial transaction would not happen, some stock market. No, like people not having a home to stay. So because every single transaction in the economy is connected. find if it's a digital transaction, it definitely is connected to the RTGS system because the settlement happens there, right? So at the point of the RTGS failure, many payments of the CLS. Now this is the foreign currency transaction system, right? For fund transfer system. Cross-currency clearing system had not settled. Pre-agreed, so then they had to go into the manual contingency arrangements, right? Resulting in CLS sterling payments being completed. So the manual transactions, they managed to sort it out, but they had to go back to the manual system, right? And service levels with two early closings, that is the Asian markets, were however breached. And so the closing times were breached by approximately 1.5 hours, although no financial penalties were incurred as a result. Right. So, I mean, everyone knew this, and I think people might have just not imposed these penalties because they knew what was going on. But otherwise, if they did impose this, then it would have been a very costly affair, right? All submitted payments, a total of 289.3 billion, right? So that is these are the sort of values that we're talking about when it comes to the UK RTGS system, was settled within the day's operating hours, which was extended until 8 in the night, right? So until they fixed it, they extended the operating time. And substantive risks to the financial system, financial loss, or long-term damage to the economy were avoided through the execution of a comprehensive plan to fully resolve the issue, right? And enable all submitted transactions to be cleared by the end of the day. So they somehow pulled it through, and by 8 o'clock, they got it sorted. But that day was really the nightmare that no one wanted to see. Like no central bank wants, I think no central bank or no banking industry wants another banking industry to go through that, because you don't know what the contagion effect, especially when things like the foreign currency systems are also affected. Trading systems are affected. So when those things happen, the whole world can become affected by the outage of a single system, of a single system. So this is why it's so important to make sure that these are robust systems. That's why there is always BCP and all that going on, to make sure that nothing goes wrong. This is also why there is restricted participants, right? Not every bank gets direct settlement. Not every financial institution, not every payment service provider, it doesn't get participant status, because by every time you connect a new participant, you expose the system to new risks. So because of that, to become a partner, there's a huge you have to meet a very high standard in terms of capital, in terms of technology, in terms of service, being able to meet the service requirements. So there is a big responsibility in being a direct participant of an RTGS system of any country, right? Now, with this review that happened in the UK, they really took a sort of a bigger view. So this happened 2014, and then so they were reviewing this, and this went on. And so while they had to they realized, okay, now the legacy issue was really the issue, and they accepted that they might have to subject the RTGS system to a complete overhaul. That is, make a new system altogether, right? And if we are carrying things like legacy issues to such a systemically important system, then it makes sense to just pull out the whole thing and bring a new system in, rather than trying to patch things up, because the risk, every time you patch things up, you run the risk of the patch being broken, right? and you also run the risk of people retiring or leaving the job. So people who knew why the patch was put and why it was fixed uh, could not be in the institution long enough to share that knowledge with the next group, right? So when the next group comes, they don't know why this patch is there, what caused it, and all of that. And then they might go to play around with it and upset the system, right? Which was something similar to what happened in 2014. So in this, so when UK's RTGS system decided to have this overhaul, concurrently we had the case of fintech. So UK is also a fintech hub. A lot of the globally competitive fintechs operating in the UK because it has a very sort of the regulatory framework is more conducive for new entrants and innovation and uh, uh, sort of diverse financial products. It gives that space. This happened from sort of Margaret Thatcher's time when she promoted deregulation in the financial industry, which really drew a lot of financial expertise into the UK because there was more space for people to work and a lot of money as well. So with fintech rising, as I said, there are now a lot of non-banks who are richer probably sometimes than banks, and this is because they get their wealth from volumes, not from large, very few from large values, but from mainly volumes, right? So they use information technology to process transactions much faster and at a lower cost. So they have higher volumes, right? So because of that, they now as they became more and more influential, they wanted more direct access to the payment systems because they had to go through banks and every time you go through a bank you have to pay the bank as well, so that upsets your cost structure, so they are not very competitive. So and with technology they most of them had a sort of sound technological background, so they were able to come up with solutions that were not posing a lot of risk to the main system as well. So in this situation, UK started considering how can we let these non bank fintechs also access these payments infrastructures directly, and is there a way to safely give them access? So in considering this, they came up with different models for they have something similar to SEFT's called faster payments. So they had a third party aggregator model, then they had different connecting uh, models for fintechs, and with this then RTGS also started considering, okay, can we give the Bank of England was also started considering, okay, can we give these non-banks? There was a lot of pressure as well to give non-banks access. So they started considering, well, can we do this, right? And as a result, they actually came up with a solution for that. So in 2015, they came up with this blueprint for a new RTGS service in the United Kingdom, right? And it was announced in July 2017 that non-banks were eligible to apply for a settlement account. Now this is a new thing, right? Now, so far in banks, in central banks, only commercial banks get to have settlement accounts, not even other banks, not even savings banks or anything like that. Only commercial banks, and then so now suddenly non-bank payment service providers get to apply to have settlement accounts in the Bank of England's RTGS system, right? So let me just for your ease. Stop. Who is the bank? Right. So what happened was they didn't, it was not like this straightforward, oh, you're same as a commercial bank. It is identified that they are payment service providers, right? That their purpose is to provide payment services. They're not banks. That they don't have, say, they don't keep customer funds. They don't give credit as such. They are only processing payments, right? But to process the payment using the real-time gross settlement system, they were allowed to have a settlement account, right? This change enabled non-bank PSPs to access directly the UK payment systems that settle in central bank money for the first time, including faster payments, that is the equivalent to slips, BACS, that is the equivalent to slips, CHAPS, which is the scheme that operates RTGS, right? And Link is like our CAS. And Visa is you know what Visa is. Visa also operates as a system in UK, and the new digital check imaging system. So that is their version of the SITS, right? So as you can see, UK actually this check imaging system came in UK only a few years ago, about 3 or 4 years ago. I think their images are from the mobile phone, slightly different to our images. But we've been having an imaging system for now for I don't know, almost 20 years now. And
15 years.
sorry, yes,
2006 somewhere.
yes, thanks. And what is happening is that now a major competitive advantage that commercial banks has to some extent been lost, right? Because now non-banks can provide as efficient payment systems as the banks, right? And then in 2018, the first non-bank payment service provider joined the settling system, that was TransferWise. So TransferWise is, if do you all know what TransferWise is?
No, madam.
Okay, so TransferWise is a international fund transfer system, like a remittance service, right? Kind of like a remittance. It is peer-to-peer transfers across currencies. Now, what it does is, so its model is, it cuts the costs, right? So now let's say I want to send $200 to from US to England. If I go through the banking system, I will have substantial charges hitting the $200, and then it will just be like about sometimes even 150 or even less than that amount that actually goes to the recipient's hand, right? Now, TransferWise, what they do is they do a netting. Now, someone might say this is like a Hawala system. So it will match. Someone here wants to send rupees, someone there wants to send dollars, and they will to Sri Lanka, and then someone wants to send rupee. Someone in Sri Lanka wants to send dollars to the US, and someone there wants to send money here, and they will match the two and net it, right? They net it. They have the netting arrangement where in each country they maintain accounts. TransferWise will maintain accounts in each country, and we will go and put our rupees or dollars, whichever country that we are there, and the value gets netted out and transferred at the end separately, right? So sometimes if you don't find the perfect match, it might take some time, but I think now TransferWise is very commonly used, so you can find a match very fast. So these are the new fintech innovations that are coming, right? And this is where banks get challenged, right? So now banks also, I think some banks are they are partnering with TransferWise. They're coming up with their own models. They're coming up with new cost structures. But these are the changes that are coming. And I really wanted to point this out because you can't change, you can't resist change, right? When technology and the market is demanding new services, you after a point, if they are not illegal, if they are not having a systemic risk, they will be allowed. So it's very important that the incumbents, that the people, the players, the stakeholders, or the firms that are existing in the industry, like in this case, the banks notice these changes and respond quickly, because otherwise they are losing their market share, right? So banks can't say, oh, we are banks, we have all these cost structures, therefore, don't let people like TransferWise come in or whatever. We can't say that, because at the end of the day, unless there is some major systemic risk, they are providing a facility that the market is asking for, right? So in that way, we have to see where the trend is going, where the change is happening, right? If it is happening in the UK, now the reason that I took UK is you can see much of the changes that are happening in the UK, ultimately we have the same here, right? We have a similar trajectory going on, right? So when these changes are happening, these will gradually come to our countries as well, right? So we have to be aware of these and get ready. Now, there's nothing to say that banks can't give lower cost remittance services or foreign currency transactions, right? So then banks must figure out a way how do we bring down our costs? With whom do we partner? Do we need to partner with someone? Can we do it on our own? But how do we solve this problem? How do we not get ourselves kicked out of the market, right? So with those ways, if the banks need to look forward and respond. And this is really the message that I want to bring in this course is, where are things going? Already you all have studied so many things that are existing. You all have worked now for many years. You know most of these things. But where it is going and seeing where it is going and responding to it is what is most important as we become senior bankers. Now, a key component of this connectivity involved the BOE, the Bank of England, extending the settlement account access in its real-time gross settlement to non-bank PSPs, right? Now, in giving the access, you see in the next slide. So, in giving the access, it was not the traditional commercial bank access that was given, right? This was only for payments. So this is a special category. So the banks still had the importance as the banks, because they serve a different purpose for monetary policy and taking care of customer funds in the accounts. Now payment service providers can't hold customer money in accounts for a long time, right? They can, for a short period, they can hold it for like commercial purposes, but otherwise they can't hold interest bearing accounts like banks, right? So in that sense, the settlement account is not the same as the one that the banks have, but it is still, where payments is concerned, a settlement account, right? So a settlement account, now for the PSP, so this is the new thing, right? Now they also don't know what the settlement account is, because they are not a commercial bank. They have people who saw that there is friction in the payments market, especially in the digitalization process. And then they wanted to come in using their technological knowledge and whatever banking knowledge they had. They just wanted to solve this problem. And then they realized, oh my God, this is so complex. There are all these clearing systems, there are all these settlement systems. Then they need to have accounts with the Bank of England. They were completely confused, because as far as they were concerned, they only knew the accounts they had with their own banks, right? Which is the traditional commercial account, right? And so now the Bank of England had to now tell the PSPs what is this settlement account? This is not your bank account that you have in your commercial bank, right? So then they explained in their documentation, this is there. It says that settlement account is only used to settle the payment obligations arising from the payment schemes which settle at the Bank of England, right? I just change it so that you. And then we have the bank anywhere else, Bank of England. Change this as well. Yes. All right. And then they specifically said that the non-banks will still have to maintain their relationships with the commercial banks as businesses. Now, each business needs to have their bank account, but PSP especially need to have a relationship with the bank account. Just like in Sri Lanka, if you are a fintech, if you are an app, that is not a bank, you need to come with a bank. You need, because your money has to go into a bank account and then come into the settlement system, right? You can't run your own digital wallet system that is completely outside the banking system if you want to be a licensed PSP, right? So Sri Lanka is the same thing. You have to come with a bank. So here the non-banks still required to have their commercial bank relationships in order to undertake commercial banking needs, including other types of payments, financing, investments. So they need to have all of that, right? In particular, participants in the deferred net settlement schemes will need a relationship with the CHAPS direct participant, right? So if you are joining the retail payment schemes, then you need to have a relationship with the CHAPS, that is the RTGS scheme direct participant, to fund and defund their settlement account from their commercial bank account. So now here, but though they have a settlement account, so bank creates its own money, it funds its own central bank. It has its own, the bank's account is with the central bank, right? Which is the banker to the banks, right? But non-bank payments service providers don't have such accounts. So for their settlement account, they have to pump money from their commercial bank account. So from wherever business earnings, the commercial bank account gets money, that money has to be used to fund the settlement account, right? And vice versa. Although that is not to say that direct participants in CHAPS would remove the direct participation in CHAPS, that is when they are directly participating in CHAPS, would remove the need to have a commercial bank relationship. That means, so this very specifically the Bank of England is now stressing, okay, you have to have a commercial bank relationship. You are not a commercial bank. You are just getting this privilege for providing payment services, right? And then non-bank payment service providers are not eligible to participate in the Bank of England's sterling money monetary framework, that is the operationalization of BOE's monetary policy liquidity insurance facilities, right? That's why I said though the banks have other purposes of their Bank of England account, right? Then or the intraday liquidity facilities, they don't have that also, right? So they have to put in all the money because there is a risk factor involved as well, as they do not undertake the maturity transformation activities, right? Because they don't have deposits, they don't have credits, they don't have anything like that. They just have to bring in money. They can participate in the RTGS as a payment service provider. But the important point is that they can, right? They can. They weren't able to before until 2017. After 2017, they can, right? And this is because, but they just can't come like that. I don't think I put those requirements. They have to be licensed by the Financial Conduct Authority. That is the main sort of regulatory for payment service providers for non-banks. They have to get their licensing from the Financial Conduct Authority, and they have to show capital. They have to show a technological develop the capacity to have the relevant technological developments to connect to the RTGS system, because it is very high in systemic risk. They have a lot of obligations. But interestingly, despite how high it is, TransferWise was able to join as the first. That means TransferWise makes a lot of money and it has a lot of capital, right? This is just to show how influential and powerful fintechs are becoming in the world. So we need to be cognizant of this fact. There's no point in denying it. It is happening, and the banks have to respond accordingly to make sure that they stay in the market and remain competitive. Are there any questions?
Madam, I think is this the point where the involvement of this custodian bank's role comes into play?
Which point?
I mean, now the commercial banks involvement with the PSPs in case
So
now
yeah,
these
so it
cash.
depends on the model. Now for us in Sri Lanka, for things like e-money, we have the custodian model, right? Where the bank comes in as a custodian, so to guarantee the funds. In different countries, they will call it different things. They might have different models. Sometimes the fintech might have to go and deposit that full money, and they might not be called custodian banks, but it could be that model. You have things like indirect participant. You have it in different names, but technically what is happening is that there is a guarantee for the funds, because the non-banks can't give the same guarantee that banks can give, because the bank's money is with the central bank. So I mean, much of the bank's money. So therefore, there is some hold. But when in a case where they can't give that guarantee, then this custodian arrangement comes in. Does that help?
Yes, madam. That's.
Okay, right. So we'll take a break now. We'll take a break of about 20 minutes and come back at 3:20.
Okay, madam.
Okay. So we have, you can see my screen now.
Yes.
Yes, madam. Thanks.
Okay. Right. So now we are moving to retail payment systems. Now we finished RTGS. When we talk about retail payment systems, if you remember the institutional framework, our discussion on the institutional framework and legal framework, we discussed how the payment infrastructure provider role was given to Lanka Clear through the modernization program, right? So all the retail payment systems are now operated by Lanka Clear, and they use the brand name Lanka Pay for all the systems under the CCAPS. That is, we have the CCAPS program, which we spoke of, which is the common card and payment switch. These are all the components of the CCAPS program, right? That we are seeing this high-level architecture of how they connect to Lanka Pay through the banks, right? So we have the ATM, POS, internet, all of these. They connect to the bank, and then the transactions then flow through Lanka Clear, which this Lanka Pay is Lanka Clear, and it goes to the core banking systems, and then it gets processed and it goes to the relevant bank, right? So this is sort of the high level architecture, and then if we add slips or whoever else we add, it pretty much works in the same way. And then finally for settlement, Lanka Clear sends the file to the RTGS system for settlement, right? So when we are talking about retail payment systems, it's important for us to discuss what this is, right? So basically retail payments systems, digital retail payment systems are how easily payment systems can reach customers. Now, in Sri Lanka, this is it is pretty high, especially because we are highly banked, right? Our proximity to a bank is very high. and an ATM machine or even a mobile money outlet is very high. Now, there was the National Financial Inclusion Survey conducted in 2008, and this is findings from that survey, right? That is done by the World Bank, and these are some of the findings, right? So we have a very broad range of financial service providers in the market, and this is due to the long-standing financial inclusion efforts that Sri Lanka has been taking, right? So the central bank, the Ministry of Finance, even NGOs, there is a lot of work that has been going into creating financial inclusion. Do you know what financial inclusion means?
The involvement of general public with banks.
So there is the sort of the official definition of financial inclusion is if someone has a relationship with a bank, with the formal financial institution. So even mobile money counts in a formal sort of registered financial institution if they have some relationship that is mainly through a bank account or a wallet. Now that becomes, you have to have that relationship. If you have that relationship, it is considered financial inclusion. That is the original idea of the word. But subsequently now that idea has that meaning has sort of evolved a bit, because now in Sri Lanka we have a case, you all will know this better than me, of dormant accounts, right? Where people have opened accounts but they never use it, right? Every person will have a bank account but they don't use this bank account. So then also they are not actually included in the financial system. They just have a bank account. So that meaning of having a bank account only makes sense if you're using the bank, right? If you're not using it, you're really not. You can say this person is included, but that person is not. That person is operating outside the formal financial system. So the real idea is if this person is included in the formal financial system. So we have our system has been quite advanced, and a lot of our financial inclusion, Sri Lanka's financial inclusion is very high, and not only normal financial, not only just financial inclusion. Banked people who have access to banks is very high. Now things like mobile money, this, you know, like Easy Cash, M Cash, then it's sort of the main ones like M-Pesa, those became very successful in those countries because they were not banked, they don't have access to banks. But in Sri Lanka, the proximity to a bank that people have is very high. So even if you go to some any far away place, there will be a bank or an ATM or something where you can access the formal financial system. So this is what is important, right? So retail payment systems get used. People will use them if they have access to them, right? So one advantage that we have is that access. But it says proximity and awareness of bank branches is pervasive. In the 2018 financial survey, within 5 to 15 minutes, 40% of the households had a bank branch between 5 to 15 minutes, right? So that is very good. And 35% were able to get to the ATM within 5 to 15 minutes, right? So that is like less than 5 minutes is basically if you're living outside the bank or something like that, right? And 23% could get to the mobile money outlet in under 15 minutes, right? So that is very, very good for a country. That means people can very easily access formal financial channels. So central bank in 2015 had a directive expanding access to banking, where it required commercial banks to open branches in remote areas when they were opening in the main areas, right? And to open accounts for new customers without requiring a minimum initial deposit, right? This was following the 2008 directive. I don't know whether you all are aware of that directive. In 2008, in 2008, to increase financial inclusion, we introduced a directive saying if you are going to open in Colombo, in the Western province, you need to go and open two
Have two
outside.
outside.
Yeah. So that this really sort of um, increase the financial inclusion in a very fast manner, because banks are opening in Colombo anyway because the economy was picking up, and automatically the outside branches also started to increase, and this is why our financial inclusion has increased, right? So if we look at the access points, right, branches and ATMs in comparison to other countries, Sri Lanka actually compares very well, right? So we are well above the South Asian average, right? Now the dark column is branches of commercial banks per 100,000 adults, right? And then ATMs per 100,000 adults. Now, Sri Lanka compares very well with, if you take Indonesia, Malaysia. Actually, we are better than Malaysia when it comes to commercial banks, right? And then even Thailand, in terms of commercial banks, we are better than these countries as well, right? When we take Asia, we are very comparable. And I always say this, when we are going to compare ourselves with, if we want to get useful information, when we are comparing ourselves with countries in terms of financial industry like banking, health, South Asia is not a good point for comparison, because we are, in most cases, we are well above the South Asian average. So we will look very good when we compare ourselves with them, right? Now, if you take India, Bangladesh, they are very populous countries as well, and there's a lot of poverty still. So even Pakistan, Afghanistan, all these countries have this issue. So when we go to compare ourselves with them, we can very easily be high up in these aspects. Things like payment infrastructure, health. So it's not very useful. But to get useful information, we have to go east. We have to either go east or find other countries in the world that have similar metrics as we do, right? So, so Indonesia, Malaysia, Thailand are good countries for us to compare ourselves with. And as you can see, and this is obvious, because when we put ourselves with South Asia, we are well above the South Asian average. So if we put ourselves with, we will look a bit like Thailand's ATM if we put ourselves with the South Asian region in this diagram, right? So let's go to each payment system. Now, first I will start, I'm going, so there's CCAPs, and then there are the other retail payment systems. So I'll first cover the CCAPs and then go to slips and checks, right? So you already know this information, which is CAS. So what is CAS? Common ATM switch.
Yes, all the banks now can use each other's ATM on shared through Lanka Pay platform.
Right. So it's so CAS is the switch. So Lanka Pay is operating the switch. So when you put another bank's debit card into the ATM machine of another bank, if you put your bank ATM card into the ATM of another bank, it immediately goes to the Lanka Pay system and it routes the payment to your bank, right? So, and that is why it's called a switch, right? That it does the switching, not there is no payment clearing or anything like that. It is the switching that happens at Lanka Clear, right? And that's why they say it's routing over 3.8 million transactions, right? Actually, this number is sort of we need to slightly update it. You can take the updated numbers are here at the bottom. And we are seeing an increase, right? Now look, these numbers are, if you look at this, now there is an increase of use with the relative cost relatively coming down. I mean, it's still 30 rupees, so people feel it. But when you look at the overall convenience of trying to find your own ATM, sometimes it's just easier to use any ATM. And this is a sort of now if you take UK, it's free. It's called Link, as we saw earlier. Between if you use the UK's cash system, there is no charge. So hopefully Sri Lankan market will also become that efficient where we can go to a point where the cost doesn't matter and banks don't, because most of the time what happens is banks have to make a technology investment, right, to join these switches, to join these facilities. That's why everyone from day one, you don't have everyone joining you. They have to make these changes inside, and there are investment decisions and all of that involved. So partly it is to recover this investment that the banks require to charge from the customer. But subsequently, once these are recovered, maybe banks will be able to provide this to their customer free of charge, because after all, the customer is keeping their money with the bank. So the bank already has a pot of money to invest and make money out of. So these are, as we go towards further advancement in the economy, we can hopefully see these things happening. So you can see the usage of cash is increasing. Even the volumes, the values are increasing. And this also another reason is because we have asked the banks to not discriminate other banks. Because in some banks, for their account, you can get 100,000 out. For the other banks ATM, they were only allowing about 10,000. We said, no, you can't do that. You can't discriminate. So with that, the more and more customers are using the cash system, right? Now, these are the fees that are levied when you use the cash system, the Lanka Pay system, other banks ATMs. Now, if you use the national card scheme, do you remember what the national card scheme is? Do you remember
Yes.
what the national? Yes.
Yes, the local card scheme issued by the Lanka Pay.
Yeah. Why do you think now Lankan national card scheme is still not picking up at the same pace as Visa MasterCard? What do you think the reason for that is? This is not a sort of a theoretical reason or anything like that. As bankers who have been in the industry for some time, what do you think the reason is?
Maybe the access to the global ATMs is it restricted? No, it's
I mean,
again through JCB. No?
It's on JCB, which I mean,
Yeah.
it's fairly available, JCB, and I think JCB has relationships with Visa Master as well. I think the main reason, I think the main reason is the promotions. You know, because Visa Master are private companies, they spend a lot promoting their cards and their schemes, as opposed to Lanka Pay, which is a local infrastructure. So that advantages are not there. So banks, I mean, I know bank has come to give me a Lanka Pay card, whereas many banks come to give us Visa and MasterCards. Isn't that the case?
Yes, I think the central bank also should be keen in promoting these things, because at bank level we don't see. Maybe that's one reason being Visa and Master, they are giving some kind of concessions on usage of those cards at some supermarkets and all outlet. But as against the royalty fee that we need to pay to Visa and Master, That's again foreign exchange going out of the country.
That's the thing. That's the thing. So I think for the individual, this is the sort of the hazard, right? When we are dealing with markets, yeah, I think we discussed this in our very first lecture as well. We have to remember we are working in an open market, so which means customers at the end of the day, customers or even bankers who are promoting these cards, banks who adopt these cards, they are all working in a market. It comes down to profit and loss and earnings. So where you will get a better reward. So whether the money is going outside or not might not be a concern to many because it doesn't personally affect them. Now, when I go and use my Visa card, Visa credit card to buy groceries, the foreign exchange payment doesn't affect me, right? Personally. So I don't feel it. So unless I am a very patriotic person and I think, no, I must somehow save this foreign exchange for the country and go and get a Lanka Pay card, and normally it's not there. And then my bank doesn't offer Lanka Pay still because my bank probably feels okay when I look at the cost of the foreign exchange that I have to, that payment that I have to make, and then what I would lose by promoting Lanka Pay that is not giving me all these benefits. Then when they do a cost benefit analysis, they might think it's better to stick to the major card schemes. So these are the practical issues. So we can introduce new systems, but at the end of the day, we are in a very competitive market. Payments is a very, very competitive market, especially retail payments. So entering that market, even with the backing of the regulator or anything like that, entering that market is very difficult because people will choose based on their cost and reward. This is something that's why I asked this question from you, because we have to understand, just because now central bank doesn't have money like Visa and MasterCard to go and give, if you buy one using this Lanka Pay card, we will give you 2 free or something like that. We don't have money to fund those mechanisms. Then how do we do those things? So these are the practical issues that arise. So I think it would be good if bankers themselves also come up with solutions to promote these, because the benefit is obvious, but whether the moral hazards that arise from all these market competition factors can be overcome is another issue. So we are seeing with these increases, then if we reflect them to the card level, we are seeing an increase, especially the recent years, we are seeing this volume and value is increasing, right? But debit cards, we've seen a decline, and we think this is due to COVID, because a lot of people didn't go to banks. A lot of the the new card holders, so people who just became 18 and have gotten these cards, those card holders didn't get their cards. So we think this might be that COVID may be the reason for this decline. And this sort of overall, it's not like a great growth, but there is a growth. And if we take credit cards, the story is the other way around. We have the number of cards have increased, whereas the volume and value of transactions have decreased. Is there any reason that you all can think of why this decrease might have taken place in 2020 during the COVID period? Because we are in all other years, we are seeing an increase. 17, 18, 19, they are increasing, and then 19 over 20. It's
maybe the people's mobility was a bit to an extent it was restricted. So thereby the usage was reduced. And the other thing could also be the income levels of clients, the customers came down drastically. Maybe those two would have the major contributing factors.
Yeah, that those could be the factors, because we also haven't been able to isolate major reasons for this. So these could very well be the factors that have resulted in this, because we are talking about a significant drop. So in 2019 it was rupees 277, and then in this 2020 it was much less. So it's a significant drop in transactions. So we'll have to see, as I said, because this was the COVID year, we'll have to see what has happened this year and next year to see how the recovery takes place. So then we have the common POS switch. Now this is connected to the national card scheme, right? So this is where we have the main thing was having the common card, the national card, where any card can this card can be used in any POS, right? And together with that, the other thing was bringing Visa and Master also in line. So all the Visa local transactions are getting routed through the CPOS, so that you don't have to have multiple card machines. You can just have one card machine and everything gets routed through the single card machine. So then we have CEFs. We all know about CEFs. The CEFs was the second phase of CCAPs. And CEFs, why can't we see this? Oops. Okay. So CEFs is the second phase of CCAPs, and as I told you before, and I think many of us now are enjoying the benefits of CEFs because it has really changed. I think it's one of those payment systems that have really changed many of our lives. Like people who have been wanting internet banking and electronic banking, this has really changed our lives. It's not only changed our lives, it's changed the lives of many others. Now, for instance, there are seniors, citizens, they might not be able to operate these systems on their own. They might not be able to operate internet banking on their own, but they will tell their children, can you please transfer it? Can you please pay the electricity bill? Can you please pay these phone bills? And they also have now gotten used to this real-time retail fund transfer. It has become so simple. Now, even the maids, they are not trying to have e-money or this easy cash or anything like that. They will ask us, can you please transfer? And we will just transfer from the phone. And it has come to that level. So CEFS is a very, very successful payment system that has been introduced. And even in the similar one is faster payments. Faster payments is also equally very, very successful in the UK, and many countries have this real-time retail fund transfer systems, and they have become it's just amazing when we now think, how did we do these transactions before? Now we transfer money to our friends and all of them so often, we think, how did we do these transactions? Did we not do these transactions before? Are these new transactions that are arising because of CEFs? We don't know, but certainly we are all using it a lot. And I think the footfall to banks also may have reduced because of CEFs. Am I correct in saying that?
Yes, I think almost all the day-to-day transactions now can be done through mobile apps, which has also enabled under the SEF platform,
That's the thing.
card
So
payments and all
yeah.
that is.
So because of these benefits, it has, I think this is the real thing to becoming this branchless banking, virtual banking really has gotten enabled from SEFs. So again, SEFs, what it does is it allows you to pay another bank, transfer between two different bank accounts instantly, right? So it goes through the switch. So your message goes to Lanka Clear, and Lanka Clear switches it to the other bank's system. And so increasingly we are seeing members joining SWIFT, so it's very encouraging. And this is also all domestically. The division that I work write the rules and the operational guidelines and all of that. And we are looking at trying to reduce the cost as we go along, because as I said, just like cash in other countries, this is free now. In the UK, a faster payment transaction is free, right? So it becomes very normal. It's like transferring to someone in your own bank. So that is the point that we have to aim to get at, where our economy is developed enough, our banking industry is advanced enough, where we don't have to charge customers for these infrastructural services. And we see that during the COVID period, though others were slumping, SEF's transactions have indeed increased, and it was very heartening. We saw even, when we were buying the vegetables from these lorries and all, even they were accepting SEF transfers. So it was very heartening to see these systems that we work on and we come up with regulations and all of that being used in a time of pandemic. It was very heartening. And I think even for the banks, all the work that you all had put in with customers and promotions during the COVID time, when people were using them, it must have been heartening, because the system was able to continue. People were able to buy their food and whatever necessities and continue during the sudden pandemic. So this was a good thing. And this is why we need to make sure that we have good infrastructure in place, especially when the need arises, it is there. So obviously, SEFs has been the growth of SEFs both in volume and value have been continuously increasing, and especially as banks have increased their bank level limits continuously, they are also increasing it. I think banks are also seeing the benefit of SEFs. I mean, they are also earning 50 rupees per transaction. So this is quite a big earning when you take the total as the numbers go up. So we will continue to see a growth, I think, in SEFs, which is quite good. So from SEFs, it's not only the interbank transfers, right? We discussed this before. SEFs has the versatility to extend itself, right? It's a new system, so it's an open and flexible system that can be connected to innovative new platforms. So one of those was the Lanka Pay online payment platform. Now this is the government payment platform. This is for customers to pay government institutions, right? Now, instead of paying through SEFs, let's say you want to pay customs, instead of paying through SEFs, you can pay through Lanka LPOP, right? And customers can pay directly from their bank accounts, right? It is a SEFs transfer, but the platform is not where you go to where you type in the bank's account number and put it. There is a real-time payment confirmation details coming, right? So this is the reconciliation part is the important part of LPOP, because otherwise in normal CEFS transfers, this reconciliation part doesn't enable this reconciliation leg properly. So it also enables relevant reports and all. Basically, it is a payment platform. So it gives these facilities. So how it works is, we have the customer here, they put in all the details, okay, and then you have Sri Lanka Customs. This is LPOP, the LPOP system, which is an extension of CEFS, and then you have the customer's bank here as well. So the money comes in like this, and then the payment message goes back, right? And then the customer gets a notification saying that the other person received their money. So the first government institution that got the connectivity to LPOP was Sri Lanka Customs, and it became very successful, as everyone had to easily pay through LPOP. And then consequently, we have been approving the connectivity of all these other institutions, and we are seeing a growth in both volume and value, right? And more banks are being connected. Of course, as in all systems, there is a big development involved. It's not the same as getting the CEFS connectivity, which is facilitated by the banks. Here, the institution also has some development to make to get the LPOP connectivity. So it takes some time. So even though we have given approvals, not everyone will be on board immediately. So there is a small lag, or sometimes a bigger lag, depending on how efficient the institution is in developing their end of the system, right? Now IRB, still not all banks, or not all 50 banks have the IRB, the Inland Revenue connectivity. So if you went to pay your tax, you would have found this issue, and that not all banks are providing this service. So this is a sample of the page that of LPOP. When let's say you're paying to Sri Lanka Customs, and then you have all this information that you need to pay, enter. And then so we have approved all those other institutions, but I think these are the only ones who are currently live. Unless someone has very recently gone live, these are the only ones that are currently on live, right? Then we go to JustPay, which is another CEFS connectivity extension, right? So this is for the mobile applications, and all mobile applications, they route their local currency transactions, get routed through JustPay for real-time payments. Now, the difference between fund transfer and payment is, in the payment, the notification of the transaction being complete comes back, right? So the customer, when we pay using JustPay, the merchant gets a immediate notification saying that that the money has been received. Now you will say, also CEFS also I get the SMS. Now what is this? Now the difference in CEFS, your SMS might get delayed. There is no specific time. But in JustPay, according to the JustPay rules, there is a minimum time within which that notification has to reach the merchant. So Lanka Clear has made that development in their system to ensure that the merchant gets that notification of the funds being received almost instantly, because otherwise the checkout line will get packed up with the merchant waiting for some customers notification SMS to come to their phone, right? So that is the difference between a payment application and just the fund transfer. Between electronic fund transfer and LPOP or just pay is that notification that completes the transaction much faster than a normal CEFS transaction. The speed of the fund transferring is the same, but the acknowledgement of the notification of the fund transfer being complete is faster, right? So we are seeing JustPay registrations are going up, they're increasing, and also the transactions are also increasing. As we just discussed, we are using apps more for fund transfers and payments and all of that. So we are seeing this increase. So similarly, now we are also seeing we started reporting on internet-based payments as well. And we are seeing a growth in internet-based payment, that is using IPGs, internet payment gateways. We are seeing an increase. So overall, there is a good movement towards digital payments in Sri Lanka, but it's still pretty slow. If you look at these numbers, and then if you look at the check and slips numbers, you will see still the numbers are significantly less. So there's a long way for us to go. Right. So now we are in. Those were the CCAPS related. I have. Let me see whether I have.
Excuse, madam.
Yeah.
Is there any particular reason why the SEFT, the upper limit is restricted to 5 million?
Yes.
Per transaction?
Yes. So because it is a retail payment system, and because of the risk involved, because now the way the SEFT operates, the bank, I explained this, I think, last time or time before. The bank, was it you who did I explain this to you all?
Yeah, can't recall it. That's it.
Right. No, sorry. I think it was at another lecture that I had to give a few days ago. Because I teach this several times. So the thing is, now in the CEFs, good that you asked this question. Thank you for that. So in CEFs, it is not gross settlement, deferred net settlement. Did you know that?
Yes.
Right. So when it's deferred net settlement, how does the customer get the money real time then?
Customer gets it instant.
Yeah. How does if the settlement is not real time, then if the settlement is deferred, then how does the customer get the money real time?
So by debiting that recipient bank's bank account.
By
Debiting the particular recipient beneficiary bank's account at the expense.
Exactly. So the beneficiary bank will pay. It's kind of like a short-term loan, almost effectively. Will pay on behalf of the customer.
Yeah.
On behalf of the other bank, right? And they will net themselves out later in the day, right? So then there is risk involved. So that is, so to cap the risk only, there is a limit of 5 million. And also this is a retail payment. So you're not supposed to, if you want to do anything over 5 million, you go to RTGS, right? So RTGS is 400 rupees. This is 50 rupees. But if you want to do more than 5 million, you have RTGS. So if these are for the purposes, so what you will notice by this is that the risk is getting compartmentalized, right? Now, if people who want real time, let's say less than 5 million, 400 rupees will be negligible to up to a certain level, right? So let's say even 100,000, if it was urgent, it's okay to pay 400 rupees and send the 100,000. But then what is happening as the economic activity is increasing, the burden on RTGS will increase because their volume of transaction, because even if for RTGS, even if it's 1 rupee or 5 million or 1 million or 1 billion, it doesn't matter, right? It is for computing systems, it is the volume, it is all are equal to one transaction, right? The number of digits in the value cell is immaterial to the computing system, but the number of transactions that it has to process is material. If the number of transactions that it has to process and then gets queued and it has to get cleared or not cleared, has to be settled, if that increases, it will have an impact on the efficiency of the system. So in all systems it's said that that's why you have what is happening. Otherwise SITs also can get cleared from CEFs, right? You can connect the two. Slips also can go through CEFs, or CEFs also can go through slips, right? Deferred now T plus 0, so it can go through slips. But by compartmentalizing these into different categories, we are sort of creating different risk buckets. So because remember, overall financial system stability is the most important thing. And then if everything goes and bunches up into a single system, the risk is higher. If something happens to that system, then the entire system could fall out. So therefore, the risk gets compartmentalized in that way. So these are sort of arbitrary, they are not arbitrary numbers, but they are numbers based on the economic activity, the need. Now you will see Just Pay. We initially started with 10,000. Then it went up to 25,000. Now, some places it's going up to 50,000, how much you can pull from the other bank account. So based on the need, and based on the use, right, as more and more people are using it, we are increasing the limit. It depends on inflation, right? If 10,000 is negligible, then we have to increase. Now, same with Mcash and eCash, right? They also ask for increased wallet amounts because with inflation, there is no point in having smaller wallet amounts. So there are many factors that affect it. For now, it is 5 million. If we see that there is there is a lot of use of it, and or there is a lot of, let's say, 550 million or a lot of 600,000 hitting RTGS, then we might reconsider changing the CEFs limit. Is that clear?
Yes, madam. But again, if I relate that to the cash vade, okay, we'll say I'm having a client who wants to send 10 million. So I have the possibility of sending into CEFs, 5 million each. But in case if I deny that, will there be a problem? Limiting a client for a 5 million per day limit?
It's not. Is it a 5 million per day limit or per transaction limit?
Per transaction.
Yeah. So you can do two.
Yeah. Okay. So there is no restriction from central bank end, right?
No.
Okay. So then
that is between your banks.
Yeah.
And also the customers. Now if it is something that the customer wants to send in parts, because up to it reaching 350, you're at a gain, right? Because this is going in
going out.
So up to it breaking even, that is until it reaches 400, you have that benefit.
Yeah.
But that is up to the customer and the banks, I think.
Yeah. Again, now, but if you increase the limit, won't that be okay? Now my client will ask for me 10 million in cash. If I I mean, if I don't do 2 shifts, instead I ask client to wait for the following morning to effect the RTGS. Though we say it's a real time from bank to bank, but from
Yeah.
customer's point, I think safety is more effective.
Yes. Yes.
I mean, our bank, in fact, discourages clients to send multiples of 5 million. But I think we are in the, I mean, so if when we are sending out money from, we'll say from NTB to Sampath Bank, so our settlement, we are supposed to make it at the end of the day or maybe the following day. So it's not like RTGS. So we are at the benefiting end in that case. So I don't see why we should discourage that kind of a thing. And again, if I discourage sending to SAFE, and if my client has 10 million in cash, so again the involvement of cash and taking it, the risk involved, and with all that, isn't it contradicting to cash vade and all that is?
Can you explain what the relationship is with? So the client brings cash and asks
No,
you to
client asks cash. We'll say I don't agree to remit 10 million. That is 5 into 2 by way of SEFTs. In case my bank refuses.
Okay.
So then customer might ask 10 million in cash from me so that he can go and
give it to the other person.
Other bank.
Right.
Rather. Okay. So in that case, the involvement of cash, while we have a good platform of remitting that money through a digital mean, because this is happening at NTB, because after a struggle I managed to get, because it was a 17 million transaction. So we happened to make it into 4 transactions, because by the time I got the request from the client, it had already almost 11:30. So by the time the RTGS cutoff is over, but this is again another commitment to another fund placement to another. It was to another investment company. I think it was to First Capital, to their bankers in another bank. So for them, it was a requirement to reach that money before 12 o'clock. So when there's such a thing, I don't know why banks are individually taking those calls.
So I mean, those are, at the end of the day, that is an individual bank. But thank you for informing me of that. I'll look into that. Thank you for this, because we have to know how practically things are getting implemented, right? From our level, we have not placed any restrictions. So this is for individual banks to decide. So we have to find out why banks have made such decisions and the reasons for such arrangements. But thank you. So we'll definitely discuss those and see how practically, because we are always monitoring this, how it's getting adopted. As I said, that's why those limits keep changing, the maximum limits, the fees, all these things change, because we always monitor as more and more people are using it. Because now those days without SIFTs, people they did the RTGS, or no one had a problem with someone taking the cash, or some way this matter would have been resolved. But now, since safety is available, people are now used to this real-time transfers, so they ask this. So it's good. Thank you. I'll go and I'll see what can be done about this, Asiela. Thank you for that. Anything else? Yeah. Anything else? Okay. So let's go to SITS. So SITS is the check imaging and truncation system. And so Sri Lanka was the first in South Asia. and the second in the world to implement this. So we were pretty early. As I said, even UK very recently they went into imaging, and a lot of checks get cleared in Sri Lanka. Sri Lanka is pretty check heavy still, right? So with the introduction of SITs, the check realization time was reduced to T+1, right? And the thing about our check imaging system is that it's from the point, it begins from the point of the bank. So the customer's obligation to write, the way of writing checks and the way of presenting it to the bank, those have not changed. Only the way that banks in those days had to physically send their checks and everyone got together and cleared them. Now only sending the image is sufficient. That is the only point that has changed. So the Payments and Settlements Act enabled electronic check presentment, and if you read that section you will say it talks to the banker. There was an interesting conversation recently about whether the electronic signature, now we know that electronic signatures are accepted under the Electronic Transactions Act, whether an electronic signature printed on a check is valid. So according to the law, if you, when you read the acts, it is not, because the law has, the Electronic Transactions Act has exempted bills of exchange from its applicability, right? So that means the check must be signed and completed the same way it used to be done under the Bills of Exchange Act. So these sort of complications come, though it, someone might say, oh, the ETA has now adopted electronic signatures, but actually it has very clearly exempted checks from its applicability. So in that sense, it is merely the image of the check that goes, right? So under SITs, we have the obligation. I think Asela, you explained the obligations between the banks having changed with SITs being introduced, and
collecting banker's role and the paying banker.
Yes. So the collecting bank also had some responsibilities now, and then based on it, the other bank also has a slight reduction of its responsibilities. I recently had a very interesting situation which needs to be resolved, which is that the person who has deposited this check has written the wrong number, and the collecting bank has typed in the wrong number. The other bank has also taken the wrong number, and the check has gotten returned because they have not checked the number on the check image. So these are some of the issues that can take place, and how it needs to get resolved, I suppose, is through the bank itself, where the customer has to write to the bank. Isn't that so?
This is amount in words and figures.
No, not the amount. The bank account number.
Account number. So
It's a very unusual case.
hardly a chance where the account number doesn't synchronize at the
But it has
collecting.
happened.
Yes, pure negligence in that case.
Pure negligence on both banks.
Both banks, yeah. But
Yes.
no, of course, the paying banker no obligation to check the crediting accounts, crediting party's account. I mean the pay's account, because it's the sole responsibility of the collecting bank. Paying banker will only consider whether the instrument is technically in order, and whether the payment, I mean the funds are sufficient to meet that payment, and all those aspects. but that is, I mean, mainly, not mainly, only with the collective banker. That is collective banker's fault.
Right. So these are the little complications that arise with these new systems coming into place. The unexpected, whose liability is it? Because the paying bank is also trying to pull funds from a wrong account.
I see. No, okay. So now I understood. It is not maybe not at the time of collection. Maybe debiting the check numbers would have inserted to the core system, uh, maybe in error. So
it is an interesting thing that needs some some investigation to see how this
yeah,
error
I
can
think
occur.
that can happen, because now we'll say I get the checkbook, but if it is linked to any other person's account, so that is done, that is through the checkbook issuing bank's fault in that case. But whereas I'm collecting the check to a wrong account and to a wrong, then it's not the paying banker's fault at all. But the paying bank point, if they are the people who have issued the checkbook and linked it to a different account, so again, that's the paying banker's fault.
It's a complicated situation, Asela. We have to investigate and see where the liability has to fall in this case, where this double error has occurred.
No, that can happen, because now we input the checkbook series. We'll say 1 to 25. We are issuing a 25 list.
I don't think this was a case like this, that Asel. I think this was a case of the number getting the wrong number getting entered by both banks wrong.
No,
I think this,
when you collect a check,
yeah.
So it is through this encoding only the checkbook, the check number gets no.
Yeah.
So then I think there won't be any problem with the collecting bankers in this scenario, because if the issuing check issuing bank has linked that particular series, we'll say 1 to 50 or 50 to 75, or that checkbook series to one particular account, assigned to one particular account, that account will only get debited when the check is presented. But whereas maybe in actual scenario, the checkbook could have been issued to some other party.
Right. I get what you are trying to say. Yes. So this is a complex mystery.
Yeah.
That could be happening from anything. So I'm also following it up to see. I will let you know how it what we find at the end. So that is an interesting exercise. So that is but SITS has made, so SITS is actually very interesting phenomenon, because though it's paper, because it's now T+1, because it's a negotiable instrument, it interestingly it competes with other payment instruments, because you don't need to have funds. Your funds aren't immediately getting pulled out of your account like in SEFs or in slips. You have a bit more time. You can give post-dated checks. You have all these facilities. So people, the check usage is still relatively high. So if we look at the volumes here, right, it's going over 200,000. And if we go to the volumes in, let's go to our SEFT volumes, right? So SEFT volumes are still much lower, right? So they are catching up, but still the checks are pretty pretty high on the demand list, and the values, though we are seeing a slow decline. This might be because of COVID, right? I think this is definitely due to COVID, because the people couldn't go to banks. But though we're seeing this decline, the usage of checks in Sri Lanka is still quite high, right? But I am not. It's a double-edged sword with checks. Checks is a negotiable instrument, which makes it very useful for commerce. And the other payment instruments don't have this quality. So we are looking to see how we can digitize checks, to get rid of the paper, but not to get rid of the instrument, because the instrument has very interesting qualities for commerce, especially for commerce, because it's a negotiable instrument. So because of that, I don't think it's useful to get rid of it, because it was created for a reason, and it has lasted for a long time, and many businesses still use checks for all its transactional purposes. And check is also the only instrument that people can take to courts.
For
Yes.
deferred payments, I think check is the only instrument, is it?
No, you can have deferred payments. I mean, you can have you can have forward data transactions. You can have all sorts of other arrangements. But check seems to be working pretty well, and people understand the check better also. I mean, those are the practical qualities in the real world. We shouldn't sort of in trying to sort of go paperless, we shouldn't try to sort of wipe out practices and norms and all of those things overnight. We have to gradually see why they're there and try to see if we can cater to those needs as we transform, without getting rid of good qualities in any instrument. So when we look at the check codes, most of them get returned under refer to drawer. And I think refer to drawer is mostly when there isn't sufficient funds. And so the average, look at the per day average value of checks returned per day in millions, right? It is quite a high number, right? So check returns is a very big issue in Sri Lanka that we are trying to minimize as much as possible, because this also is a problem, because there's a law regulating it as well.
Actually, you mean to say about 47 million checks get returned as refer to draw?
No, these are not. This is in percentage.
A percentage, okay.
Yeah. You can get all these statistics are available in the payments bulletin on the central bank website. Then Lanka Clear also has the dollar clearing system, which we generally don't talk about, but it is when dollar checks or drafts are issued by commercial banks in Sri Lanka that are payable to Sri Lankan individuals or institutions. So these are sort of locally routed dollar transactions. Dollar checks issued by banks or exchange houses abroad, drawn on commercial banks in Sri Lanka. So they have they clear these two sets of checks, dollar checks in Sri Lanka. I just wanted to put this here because it's important that you know the existence of these systems as well, in case you don't use them. Then we come to slips. Now again, we all know slips. It's for batch processing. So the the payer will send in batch, and then it slips, they break it down to individual accounts, and they clear it for settlement. So slips it serves a different purpose. It's not for retail payments, it's not for individual transactions, it's primarily for, even though you can do individual transactions using slips, it's primarily for batch mode fund transfers. And this is again my point on risk about how you separate certain types of payments so that you don't sort of mix them up and increase the risk of a single system. Right. So see, the slips is growing, I think, with the economy and generally more and more companies coming into these systems. But generally, it is sort of rather flat because it's not something. It's not like retail payments. It's not a new area where we are promoting for people to come in. Automatically, most companies, when they have like large employees or anything like that, they will go into slips type of payments. Now, most of these, now this is a breakdown. Most of slips is for salary payments. 63%, 64% is for salary payments, right? And then you have customers also using it for fund transfers. Then you have standing orders, small amount of insurance payments and other payments. So again, slips grows, but not like in huge numbers, but it has a healthy growth, I think, with more and more people moving into digitalized payments. Then I thought of just adding this one also, the e-money transactions. They're also growing. There's a lot of, if you listen to the radio these days, you will see that there's a lot, radio, TV, whichever media, there's a lot of promotions of e-money systems, Dialog, Easy Cash, Mcash. It's becoming very competitive, and they're also coming up with innovative products to gain the market. So increasingly we are seeing a change in the payment patterns at this level as well, because they're becoming more interoperable. You can pay utility bills, institutional payments, internet transactions. So it's becoming quite versatile. Though it started as a very sort of small bit bottom of the pyramid solution, it has sort of grown into providing a lot of mainstream solutions. So e-money, because of this, we see e-money is growing. Of course, in the last year, it has experienced a hit, but generally it has been growing. I wanted to show this once we'll complete this today. I didn't want to go into a lot of detail because this is, if we want to go into detail, we can go into a lot of detail in this session, but it just becomes sort of mentally straining and just tiring altogether. But I wanted to show this statistics before we end. It's difficult to see. Let's see. Right. So this, the reason I want to show this to you is because it's, let's see. Right. So what this shows is, this is from the Bank of International Settlements, and they have the centralized statistics, and these are their member countries, the main member countries of the Committee for Payment Infrastructure. So this just shows the ownership and of payment systems in individual countries, right? So the types of payment system. Now Sri Lanka is not here. Now we have already studied payment systems. Now if you take Korea, they have large value payments and 2 retail value payments, right? And then they have real-time gross settlement, multilateral netting, bilateral netting. So these are all, if you look at this, you can see that all, now if you look at, now if you take Hong Kong, they are like us. All the settlement is going through RTGS. All of their settlement is going through RTGS. So likewise, again, the owners. Now, if you study this, you will see that almost all countries, the large value payment system, right, the RTGS in Sri Lanka, and so it's this Sri Lanka's large value payment system is RTGS. most of them are owned by the central bank. And the reason for this is because the settlement accounts are with the central bank. The bank settlement accounts are with the central bank, right? And these systems are owned and operated, the large value payments systems are owned and operated by the central bank. And here there are, like our Lanka Clear, now Lanka Clear is also owned by the central bank, all the commercial banks. Those are the two owners. So a lot of them have that sort of similar arrangements where the payment, now interestingly in China you will see most of these are owned by the central bank themselves. Only one is owned by the payment association because those are more centralized systems. And then in Hong Kong, the managers are another arrangement. So likewise, but you will find a pattern here. You will find a particular pattern here where with ownership, the retail payment systems are generally owned by payment associations. That is, all the payment service providers or the LCBs or some arrangement like that. Whereas the LVPS, the large value payment systems like RTGS are owned by the central bank. Now, even if you take UK, now here's UK, CHAPS is the large value payment system, right? So that is owned by the central bank, right? And then where did UK go to? Here we are. Then the check clearing, BACS, faster payment, they're all by the banks, right? They're all jointly owned by the banks like in Sri Lanka. So the point is that what I want to show is that when the reason that ownership models change is that one is to ensure financial system stability. Other is to make sure that there is market involvement instead of central bank telling all the banks, okay, this, do that. When the banks also have an interest in the payment infrastructure, they have a greater incentive to make sure that it is efficiently providing them also services. So if it's not just it's not just a regulatory obligation, they have a business interest as well, because if the infrastructure that they own is performing well, it is good for all of them. So in that way, we have multiple, each country will have multiple ownership models, management models, then this is the processing model, here we are, this is the other one, open and restricted membership. If you look, many of them, they will have restricted membership, right? And if you go into this detail of what is meant by open, even though they call it open, to get into that open membership, there will be a lot of requirements. Again, all these systems, almost all of them are centralized, right? And these are the pricing models. Closing times, you can see some of them are open all the time. So just take a look at this to see how this works with your experience of the Sri Lankan system and now your knowledge of the Sri Lankan system, and see how can we develop this, how can we advance this going forward, what can we change. Now, we were doing a study in Korea, and now in Sri Lanka, we have to choose our own payment system, right? Like we make the transfer through SEFs or slips. In Korea, it's not the same. All the payments come to a single point, and then the system determines based on the transaction value and the speed and all of that required, it decides where the payment should be routed to. So different countries have different solutions. So we were not sure when we were with the Korean colleagues whether the Korean example is better or whether our example is better. But both are working fine. So, these are judgment calls and on how people see the efficiency. Are there any questions? If there are no questions, Gayan, we can.
No, madam.
Right. Then we can round it up today. I think because it's a long weekend, most of the other colleagues also might be away. So thank you for joining. And I'll see you next Saturday. Right.
Okay.